Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face.
I think there's no better place in the country to be investing than Los Angeles.
What is the problem that you're solving and for who? Like, what is that specific pain point?
Sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
I want to see somebody that isn't going to stop. You know, this person, you just feel like they're gonna make it work.
Today's guest is Melinda Moore, who's a general partner at Moore Ventures. She's also a co-founder of TuesdayNights, and as a serial entrepreneur, she brings experience from both sides of the table to this interview. Melinda, welcome to the show.
Thank you, Justin. It's so exciting to be here.
Yes, we're happy to have you on. And where I want to get started first is with Moore Ventures. You're in the middle of raising right now, but what areas are you going to be focused on with this fund?
Yeah, so Moore Ventures is entirely focused on investing in the low carbon economy.
Okay.
And so we have 4 sectors that we're investing in, and those, I did a bunch of research, and those sectors are the ones where we can have the greatest impact on lowering CO2 emissions.
Yeah.
So that's in green building, renewable energy,
Okay.
sustainable food, and in alternative transportation.
Great. And how did that come about then? How did this fund, the idea for where you wanted to focus with this and everything, how'd this come about?
Right. So I've been a serial entrepreneur for the past couple decades.
Yeah.
And most of the companies that I've started, which LovingEco and I was advising Love Goodly, a lot of these companies are in the sustainability space,
Yeah.
primarily getting women to vote with their wallet for ecologically conscious products, because we're not really aware of like what we're putting onto our skin, what's going into the environment,
Yeah.
and like how many toxins are out there. So for me, it was just a natural evolution to start Moore Ventures, in the sense that when you're looking at the research and the UN reports regarding what's happening with CO2 levels,
Yeah.
they're at an all-time high. And what happens with that is then things are heating up, and if it's heating up, ice is melting. And unfortunately, by 2050, we could have at least 200 million climate immigrants. So when you have to move an entire town of Jakarta or places in India because it's underwater and you have to move 10 million people at a time,
Yeah.
I'm like, okay, we have an issue.
Yes.
So let's use all of this intelligence, wisdom, the people that I know, to make a positive impact.
Yeah, that's awesome. And that's obviously such a huge need. I mean, that's
It
why
is.
it's
Well,
massive.
I think human survival depends on it.
Yeah.
I'm literally like, okay, I've got to go. Like, I'm working and someone interrupts me. I'm like, I got to go. I got to save the world right now. I'm like, you really?
No big deal.
Yeah, I think you should let me do that.
Yeah. And for this then too, because of that, I mean, what is that diligence process going to look like as you're evaluating companies when you're eventually going to make investments?
Right. So the way that I'm looking at it is, clearly I'm not an expert in each area. So across the 4 verticals, I brought on strategic advisors that have like decades of experience. You know, I just recently brought on Mark Ellis to do renewable energy. So he comes from Sempra Energy, ExxonMobil, McKinsey, has a great background at Harvard and MIT. And so he's helping me evaluate all of the renewable energy and alternative transportation deals.
Awesome.
So it's essential when you're dealing with like hardcore science and scalable technology that you have people that can truly identify if the technology can scale.
Yeah, that makes a lot of sense. And how have you been approaching those people and like you're targeting certain people to help you like bring on board with Moore Ventures?
Yeah, I mean, I think you learn through decades of entrepreneurship that it's important to be bold and to ask people who know. I think that's one of the things that I've learned, is just to ask for help, right? But to ask for help that people, it's the experience that I've had is being able to identify great leadership and a good team and build the right culture. So for me, it's just about asking, but then it's also about creating a win-win. So that's like how you're structuring the incentives, the culture that you're creating, and making sure you're on the same page.
Yeah. And for raising this fund too, I mean, what has that process been like for you so far, Melinda?
So raising money, I always say this to entrepreneurs, like you have to run a company
Yep.
and you have to raise money, which means you essentially have 2 full-time jobs.
Yeah.
And, raising money is definitely challenging.
Yeah.
I would say this, like I'm highly motivated. I feel like I'm on a complete mission for at least 2 reasons. One is I care so much about the environment, and I grew up in Santa Monica surfing and hiking, and I get a lot of inspiration and peace from nature.
Yeah.
And so I want to protect it. And then secondly, as a woman and my partner's African American, it's really important that we shift the dollars. Last year, less than 2% of venture capital went to women, and literally less than 1% went to minorities. So for me, at this point in my career, in order to change that equation, you have to write the checks. So I feel like there's just no other choice but to succeed and to provide really healthy returns for my LPs. And so the process is just, you have to just have fun with it, kind of gamify it. Like every day I reach out to at least 5 new potential LPs, but it's also being very strategic, right? So it's looking at the family offices, looking at high net individuals, private equity, but people that have raised their hand for doing impact type investing.
Yeah.
I always say that to entrepreneurs, do your homework, make sure that who you're reaching out to, that it makes sense.
Yeah, of course.
I'm not going to reach out to somebody that's never ever done a renewable energy or alternative transportation deal, and they only do something that makes no sense.
Right. Yeah.
Because we're wasting everybody's time, and with raising money, there's just no time to waste.
Yeah, and then coming from like that entrepreneur perspective too, looking at the entrepreneurs as they're kind of going through their whole process of fundraising as well.
Yes.
I mean, what should they be thinking about? What are maybe some questions they should be asking as well?
So first of all, you want to make sure that the venture capitalist or however you're raising the money isn't having these discussions because they have a direct competitor in their portfolio. So they're just looking to get intelligence, because we're always looking to get intelligence in every conversation that we have. So number one is make sure you're not handing over like all of your secrets to your direct competitor. So just go to their website, look at the portfolio, go on Crunchbase, just make sure you're not handing everything over to a potential competitor, right? So that's one.
Sure.
2 is you really want to make sure that they're going to, add value. So what is the money? What is the venture capitalist? What are they bringing to the table? What are they offering you? Do they have the right expertise? Are they going to be able to help you with culture? Are they going to be able to help you with, continuing to raise money in future rounds, adding to your team, those types of things? So I really evaluate what I call like the value add.
Yeah,
and smart money. You got to raise smart money.
Go for it. What do you mean by smart money? For people that aren't aware of that.
Yeah, so smart money to me is smart strategic money, which means you are in complete alignment with how you want to move the company forward, and strategically what value you can add to the VC and the VC can add to you, and making sure that you really think that they have your back and they want to move your business forward. And they want to move your business forward in a way that's completely in alignment with your mission.
Yeah. And one of the things we had actually talked about before a little bit, before the interview, was like different options that entrepreneurs have for raising money, even if it's not venture back. Can you talk a little bit about some of those options just so they have an idea of what is available out there even?
Absolutely. So for me, I'm so passionate about entrepreneurship because I really believe, with a single idea, you can change the world. So it's whether like it's 3D printing for houses, where you can buy a house for $3,000 instead of, $300,000, or right now somebody created a blood test where they can detect cancer. So for me, I love ideas and how much they can transform literally the world and people. So something that I've just always been passionate about. So when you look at the equation and you say, okay, well, VCs only gave 2% of money to women, less than 1% to men, and oftentimes they really are in the business to say no, they have to be, just because that's just the way that the numbers work.
Yes.
And so there's got to be other alternatives. So I actually wrote the book, How to Raise Money, The Ultimate Guide to Crowdfunding. I definitely believe in both equity and rewards-based crowdfunding. If you have a B2C company, it's great to get market validation through like a Kickstarter, Indiegogo campaign. And then there's a bunch of platforms that are actually really good. Circle Up, Crowdfunder, Flash Funders, and these are all for equity crowdfunding. So actually getting money from accredited investors and giving away equity. So it really goes down to the why and the storytelling. So for entrepreneurs, I always say, and there's debt equity, so you can get working capital for companies, you can raise money from banks. I think it's really important to understand as an entrepreneur what are all the different avenues of raising money and what are the pluses and minuses and what is going to make the most sense for the type of company at the stage that you have.
Yeah, and on that point then too, for companies looking to raise funding then, which companies are the ones that should be looking for venture capital?
Yeah, okay. So companies that should be looking for venture capital are ones that are primarily like hardcore technology based, in which it's, you know, expensive to produce the products, to get them out there, and that they have the potential for like a hockey stick growth. So essentially what VCs are looking for is like over the next 3 to 5 years, they want to see you go from like 0 to at least 100 million in sales and have that curve in terms of the growth. So you have to make sure that your business is in alignment with that type of growth. So a lot of SaaS models fit in really well with that, you know, whether you're Salesforce or, you know, any type of, you know, B2B kind of model. And so it's like I said, it's really a certain type of primarily technology based versus, you know, B2C. Like if I had a new oat milk company, I probably wouldn't get venture funding.
Yeah.
Even if I could, I wouldn't take it because they're going to push me to grow too fast. They're going to take too much of my company and force me to do things that I might not want to do. But I think venture is really good for businesses that require that are very capital intensive, which reason why I'm doing more ventures that way is a lot of these technologies that are highly scalable I'm looking for the Apple of agriculture, you know, I'm looking at renewable energy, I'm looking at alternative transportation, Tesla, Hyperloop, all of these things are extremely capital intensive, which is why venture to me made the most sense.
Yeah, and it's important for entrepreneurs to understand like there are different options for fundraising, and that point of what you mentioned of who it's actually for, because everyone sees all these different raises and these, you know, for every different company, it seems like everyone's getting money, but venture money is not for every business, and I think it's important to understand that.
And I think it's like, you know, we live here in LA.
Sure.
And California is the 5th largest economy in the world. And so I think people like to say, oh, hey, I got money from Upfront Ventures at a cocktail party.
Sure.
And so they like to kind of becomes a little bit of a bragging right versus wait, are you actually making the best strategic move for your company right now and for its long-term future?
Yeah, and with what you mentioned with more ventures and as you're moving forward, obviously the huge mission behind it as well. I mean, how are you going to evaluate entrepreneurs in terms of where they come from? Because we are in Los Angeles right now, and then it's like, oh, clearly there's people here, but there's entrepreneurs all over the place. How are you going to go about that?
I'm actually already evaluating deals in Israel, in Japan. You know, I'm evaluating a deal that is doing desalinization, but using waves from the ocean. And that's actually from Japan, because the ocean is endless in terms of the waves. So in the past, desalinization, or filtering water, has been very expensive and it requires a lot of energy. So it doesn't scale well. But if you're using a natural resource like waves in the ocean, it's very interesting to me, right? So I'm already evaluating deals all over the world, and I've created a really interesting vetting process. And so I obviously look at the opportunity. I look at the size of the opportunity. I look at if they have intellectual property. You know, is it something that I can talk to a customer already? Yeah. Because I want to talk to a customer because I want to invest in companies that I think have the ability to scale. My partner, Daria Sankey, has extensive expertise in intellectual property. Okay. So we can actually license intellectual property and sell that. He splits his time between China and here. Oh, wow. China and the United States are the two largest, dirtiest countries in the world. So we can have the greatest impact by being able to take technology from Germany, Israel, the United States, and bringing it over to China, or even finding things from China and bringing it over here. So intellectual property to me is very important. And then looking at the team. So, I want to look at the why, how passionate the team is, their level of experience, expertise, have they had exits in the past, the culture. And then I've also, I'm working with my partner, Mark, on the renewable energy side, and he's developed a proprietary platform that actually analyzes entrepreneurs' performance and development. So it's called Aperture.
Okay.
And so we're putting all of our entrepreneurs through this. And it's a platform that tests and looks for openness, flexibility, leadership, and we can identify strengths and weaknesses and also work with them over a development plan. So I think that's one of the unique things that actually More Ventures is doing, is we have a development platform that we put all of our entrepreneurs through as part of the vetting process.
That's very interesting. Is that answering a bunch of questions? Is it like interview style? Like
it's a mobile app.
Like mobile app.
It's a bunch of questions.
Okay. That's
and then we
fascinating.
measure it over time too. So
Awesome.
it's not only like a test that gives you sort of output, but it's also a development platform to help you become a better leader and help you become better at analytical skills, better at understanding culture, and open-mindedness. Because open-mindedness and flexibility, we've found, is very key in having successful entrepreneurship and leadership.
Yeah, and with you mentioning the also sourcing deals like in Israel and other places too. I mean, how are you sourcing deals then, and how are they coming to? Like, how's that happen?
It's pretty amazing. LinkedIn.
Yeah.
I am very active on LinkedIn.
Okay.
It's an incredibly powerful publishing platform.
Sure.
And I get extensive deal flow through LinkedIn.
Awesome.
And then because I've been an entrepreneur, I have a great, expertise with raising money in the past. And so I have a really good venture network.
Yeah.
So I'm working with a lot of the VCs that are up in the Bay Area that have been very focused on impact investing for about a decade. Because in fact, I literally think that impact investing, it's $1 trillion opportunity. And it's only really been around for 10 years. So I think it's one of the greatest investment opportunities of the century.
Yeah. And what you say, it's only been around for 10 years, you mentioned.
Yes.
Like
impact investing.
Yeah. Why would you say that is one of the greatest opportunities? Diving a little bit deeper into that, impact investing.
Because fundamentally, we have to change everything that we're doing, which means we have to change the way that we grow food. We have to change the way that we transport ourselves, both in the air and on the ground.
Sure.
We have to change our homes in terms of the way that the energy, the way that we're heating, all of the appliances. We have to change what we're eating, like all of these things.
Yeah.
So, technology talks about disruption, and disruption, there's opportunity. But I'm basically saying we have to disrupt the way that we're living. So I find great opportunity with that. So like I said, I'm definitely looking for the apple of regenerative farming, right?
Yeah.
And so farming has become this big business, and it's all about monoculture, and we've put so much chemicals with Monsanto into the ground, and it goes into the water supply, it goes into the air, and so this is not healthy. So I'm looking at ways, even like using robotics, but using techniques that don't use any chemicals.
Yeah.
And that have better output for food, and that are focused on biodiversity. So for instance, those people in LA that love their avocado toast, over 80% of all of avocados grown in California and Mexico are Hass avocados. They're Hass avocados because essentially they can make more, everybody thinks that they can make more money, so they can grow more of them and fit in a box and sell them at like Ralph's or wherever you purchase your avocados.
Sure.
So it's all about money making. But the problem is, let's just say something comes in, a bug, a bacteria, a virus, and it wipes out Hass avocados. Well, now you're not going to have avocado toast anymore, right?
Big problem for Californians, for sure.
A big problem. And so, you need biodiversity in order to be healthy. So I want to bring biodiversity back to the entire food system around the globe. I mean, as an initiative.
Yeah, not being reliant as one necessarily.
Monoculture.
Yeah.
I mean, monoculture is not healthy.
And now we'll take a quick break and hear from our sponsor, Brex. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. And back to the show. So what areas are you most interested in terms of investing? What are some things you're seeing that you're like, okay, I'll definitely these particular areas? We talked about this a little bit, but I'm curious on what areas you're really excited about right now.
So within alternative transportation, I'm definitely looking, all of these cars are essentially using batteries.
Yeah.
And so there's kind of two levels to that. One is how can we make more efficient batteries so that they can be more efficient with charging, going larger distances. But then right now, a lot of these batteries are sitting in warehouses because they're actually not clean, because how do you get rid of a lithium battery, right? So I'm working with Mark right now on what could we do to upcycle these batteries?
Yep.
Because it's actually, people are like, oh, I'm driving a Prius, I'm being great for the environment, but they're not necessarily thinking about the battery.
Yeah.
And so I'm looking at the battery, I'm looking at the Salton Sea, because the Salton Sea is really toxic in California, but there's a lot of lithium. What could we do there to clean that up and actually create more efficient batteries? Like I said, I'm looking at regenerative farming. I'm looking at AI robotics that are using essentially robotics to get rid of the weeds, and you don't even need to till the soil or use any fertilizer. So I find that really interesting. I'm looking at a lot of water filtration systems.
Yeah.
I'm looking at desalination, but using waves instead of traditional power.
Yeah.
I'm looking at a lot of renewable things that could just right now in California, PG&E is really in trouble, and with all of the fires. I'm also looking at the regulations, like what regulations are happening, so that I can find some opportunities there specific to regulations around fire risk mitigation. And that's around like green building, it's around energy, all of these things. I think it's really exciting right now.
And how do you hear about some of these ideas, these different things that people are working on? How do you go about learning about these and hearing about what's going on? I'm just curious about your process of looking for these different opportunities.
Yeah. So first of all, I developed like I said, we've developed a tight vetting process, and then we across the 4 verticals, so alternative transportation, the food, renewable energy, and green building, I put together like a small white paper that says where I think the opportunity is.
Okay.
And so then I kind of communicate that to the community, on LinkedIn, through the VC network, private equity network, family office network, of specifically where we think the opportunity is.
Yeah.
And like I said, because my partner Darius is excellent in intellectual property, we think that we can accelerate in a unique way as a VC by leveraging that IP and being able to license and sell it to multiple countries immediately, whereby offering our LPs immediate liquidity. Because if you look at the IPO market, it used to be on average 8 years. Well, it's now gone to 10 years, and there's not as many IPOs. So as a venture capitalist, it's my responsibility to my LPs to provide strong returns.
Right.
So I'm doing that through unique intellectual property.
Yeah, that was awesome. And one thing we haven't talked about, we had to get to, is Tuesday Nights.
Yes.
How did that get started in the first place? And what is it for people who don't know?
Of course.
Yes.
So Tuesday Nights is TuesdayNights.org, and it's a powerful female networking organization where we're moving businesses forward and creating a community to really help one another across all verticals of business. So technology, entertainment, nonprofit, fashion, beauty, everything. And when Justine Lassoff and I started LovingEco, and it was a flash sales site for all green products, like for women. So natural beauty, skincare, fashion. We went to raise money, and people on Sand Hill Road, A, they're men.
Yeah.
And B, they're like, what do you mean natural skincare? What do you mean organic? Like, we could have been speaking Mandarin Chinese, even though our numbers and the cohort analysis and everything was growing at a phenomenal rate.
Yeah.
We weren't able to raise more money. And that was just highly frustrating. And I do want to say it was kind of just a boys' network.
Yeah.
So we kind of looked at each other, and this is in 2013 that we started this. So many years ago, before there was a girl boss hashtag and things like that.
It's different, yeah.
And yeah, it's much different now, which is better. And so we said, let's create a network for women and help elevate them, because, women, there's the strength of it's our version of the PayPal mafia for women.
Yes. And when you started that, I mean, what did you plan that being exactly? Because you want to start this network for women, that there's a need for this. Like, what did you have plans for that being and looking like, and how has that kind of progressed over the last, 5-6 years now?
Yeah. So it started off, obviously, we wanted to pull some amazing founders across different areas of business. So
yeah.
They are. So we got an incredible foundation of women to kind of start it with us. And then we started by events, and those events are panels, fireside chats. We have a private Facebook group, and we do a lot of polling to say, hey, do you want to learn about raising money? Do you want to learn about branding? Do you want to learn about, impact, like all of these subjects? And so we would just provide programming based on events that we do usually on a Tuesday evening.
Go figure.
So that's what we do, and it's evolved to doing bigger conferences around it. And we did a huge impact conference that was completely sold out in Santa Monica.
Wow.
Next year we're doing a media conference, so media about inclusion, diversity, and more women's stories. So Channing Dungey, who was the first African American woman to run a network, she ran ABC, but now she's running original content for Netflix. So she's one of our keynotes. Wow. And that's the media one on May 1st.
Okay.
And then we're going to do a fall one that's on impact that we're programming. So now we're kind of moving to having even greater impact, if that makes sense.
So larger scale events is now
Yes.
more so what you're focused on.
Exactly.
And then you're just charging per event then, right?
Yes, we are.
Okay, that type of thing. And now with all the things you're working on, how are you managing your time, and where is your time focus on these days? Because there's a lot of different things you're involved with.
Yes. So More Ventures is definitely my primary focus.
Yes, of course.
For sure.
Yep.
And with Tuesday Nights, we have a great team. So we have a small team that helps, and I'm definitely will be involved. But More Ventures is where, I'm putting really 100% of my energy, because I just feel it's that important. And it does take, I will say this to entrepreneurs and venture capitalists, it's beyond a full-time job.
Yes,
Yeah.
a lot of
Balance
time.
is an illusion. Don't really have it.
With that then too, I mean, for those who don't know, as you're raising this fund and working these different things, what does your day kind of look like in terms of meetings, or in terms of how is that structured?
Sure.
I'm sure it's different, but
Yeah.
how does that look for you?
So, but I think you have to have certain discipline. So I wake up, I meditate, I go to the gym.
Yep.
So I make sure that I start with a very strong, grounded, and high energy, right? And not having anxiety. Honestly, working out helps me with the anxiety of raising the money and the pressure that's on there to deliver, returns back, right?
Yeah.
And make the right decisions. And then, the day is just what I love about being a venture capitalist is my job is to talk to incredible entrepreneurs doing amazing things all day long. That is my job.
Yeah.
Yeah.
That's pretty cool.
And then the part that's tougher is just simultaneously raising money. So talking to the family offices, to private equity and high net worth. And, it's like chasing whales.
Yeah. All day long. And then
All
you
day
have
long.
meetings with the other people, with entrepreneurs.
So it's just really focused multitasking, which I know is dualistic.
Yeah, and having that experience though as an entrepreneur for many years as well, and knowing that many entrepreneurs are going to be watching and listening, I mean, what would you tell them as they're going through the process of building companies?
Yeah.
Things to think about, any particular lessons that you think are valuable that they should know?
Definitely. So I think don't underestimate setting a really positive culture.
Okay.
So culture is really important. So understanding what type of culture you want to create, making sure that there's structure around that culture, that everybody that you hire is going to kind of fit in well to the culture.
Yeah.
And I think a culture, you have to allow people to fail. Because if you have, I think one of the things that I see is, all entrepreneurs want to be perfect. Well, perfect is really an illusion. And then when you want to do things so perfectly, you end up not releasing things like products, items.
Yep.
And what I always say to people is release something faster than you think so that you can get feedback from customers, because that feedback is so invaluable. And if you're listening as an entrepreneur to your customers and you're building it for them, you're going to be more successful.
Oh, yeah.
And so I actually see a lot of fear because it's around perfection. And I think we need to just break that perfection doesn't exist. You're never really going to achieve it. And so it's better to just work really hard, get it out there, get the feedback. But then that means you have to create a culture where you allow your employees to fail. But that also means that they're taking greater risks and more innovation. And then I also, a big goal of ours is diversity. So we fundamentally at Moore Ventures believe in diversity, and that diverse teams, they promote more innovation. They're better at pivoting. In fact, the research shows that they have higher returns. So, if you have a bunch of people that bring different perspectives, that actually creates strength versus like all the people that look the same. So I always tell entrepreneurs, make sure you have a really diverse team. And that's the team at the C level, founder level, and then all the way down. Yeah. Right?
And with that piece, going deeper into like the team aspect, because obviously that's so important. That's also what all these venture capitalists are looking for in a company, especially early stage, is the team. And the hiring process is so important. I mean, what should founders be thinking of, or questions they should be asking these potential hires or looking at to make sure they do actually build like the right culture? Because it's so important, but then it's like they're going to be building their team. They're trying to like get help however they can. I'm just curious if any insights you have on what they should be asking potential employees.
Like for interviews and stuff, like the interview process.
As they're evaluating these different people to join their company.
Well, I think it is definitely the questions, but it's more how does somebody respond to you?
Yeah.
How flexible do you think they are? It's even higher than the questions.
Sure.
I would say.
What's the starting point? Yeah.
Yeah, it is a starting point, but it's yes, it's having certain questions, understanding obviously their expertise, understanding do they have the grit. Because being in a startup is really tough, and so it's an emotional roller coaster.
Yeah.
So, asking people if they're okay with like high highs and low lows, and they're able to wear a lot of hats, right? Because in a startup, you need people that are generalists as well as specialists, right? And so having that right mix. But it's like watching how somebody responds. Like how open they are. Do they cut you off also? Because I'm looking for people that are really good active listeners, where they don't have to feel that they always have to prove themselves.
Like throughout the entire conversation.
And if they feel that they have to prove themselves, I understand that, but it's probably not great because they'll be doing a lot of interrupting and creating like a defensive environment versus a really receptive, active listening, learning environment.
Yeah. And with you in your career too, like building companies, like what were maybe some of the biggest challenges you faced and like that startups should know about or should anticipate like running into? I'm just curious on your personal experience too.
Sure. I mean, so raising money. I mean, so the number one reason that companies fail is they run out of money. So you always have to ask for more. And as you're raising, you have to ask for more. You absolutely have to ask for more, but you have to obviously get the more on terms that work. But it's better to raise more than less. And unfortunately, women are notorious for asking for less. And so I always tell women, no, you need to know your worth and ask for more. And you're selling an opportunity. Like with Moore Ventures, it's an opportunity. It's $1 trillion business to be a part of the impact. I'm building the best team. I have incredible knowledge. I understand media, how to build diverse teams. So when I'm communicating to potential LPs, it's from a position of, I am inviting you to an opportunity.
Yeah. Exactly. And with that too, I mean, obviously you want to ask for more. How do you knowing what you're worth? I mean, how do you figure that out? How do you understand, like, is it just getting more perspectives or input from other people who have done this and be like, yeah, you should probably ask for more than that? Like, what do you think it is?
Yeah. I mean, so asking for more is, it always takes you long. It's like construction. It always takes you longer to raise the money.
Sure.
So that means the critical thing is being able to go from round to round to round, typically in financing. So you have to make sure that you have enough to get enough traction of your story so that you have a story to be able to raise the next round, right? And you have to be able to raise the next round when you're already trying to do everything that you're accomplishing in the first round. And it's by being a good storyteller, right? It's like making sure that you're communicating to investors on an ongoing basis and letting them know like all the exciting things and advancements that you've made so that you're kind of always raising even when you're not raising.
Yeah.
You know?
Yeah. You kind of
You're
always
always
have to
raising.
be. Yeah.
You're always informing people. You're educating. You're being a really good storyteller, a great salesperson for what you're doing always.
Yeah, and as you're as a VC, then you're hearing these companies pitch, and
Yes.
they're telling stories all the time, but you're seeing a lot of companies, and only a few of them you'll actually be able to
Correct.
invest in.
Yes.
I mean, what are some of those things that either make a company stand out in a positive way or a negative way that helps them actually get through to maybe getting investment?
Yes. So let's go with the positive first.
Sure.
So with the positive, it's, definitely looking at a team that understands that they're uniquely addressing something that's big in the marketplace,
Yeah.
right? And for me, I need to know that I don't just want an idea on a napkin. I want to know that they had enough grit to get it to a point where I can actually talk to a customer.
Yeah.
Because if they're going to say, oh yeah, we can do X, Y, and Z, I actually want to talk to the customer.
Yeah.
So I say that to people, and a lot of times, entrepreneurs, they get a little weak when I say that because they're like, oh, but it takes this and this. And so they start to kind of get weak when I say I want to talk to a customer. And I'm saying to them, but because it's my first fund and we're talking about 25 million,
Yeah.
I have to be very careful that I apply it to companies that can truly scale and reduce our carbon footprint.
Yeah.
So if you're going to get squealy with me about a technology that doesn't really exist yet, then that doesn't look good. And I've already had a few of those conversations, and
Yeah.
people get super defensive and this and that. And that to me is a bit of a turnoff because they've got to figure out how to make it happen. It's
Right.
like the Nike
Right,
swoosh.
right.
Yeah, make it happen.
Yeah. Just
You
do
want
it.
money and you want a lot of money, then let me make sure that it works, right? You
Yeah.
should make sure that you test it, right?
Right.
And then on the flip side, okay, so what
Yeah. So the negatives. What are some negatives that companies have that's just a no for you as you're passing?
Yeah,
You're looking
okay.
through a lot of different things. Yeah.
So I do. So listen, I'm really looking at unit economics and
Okay.
business and the numbers. And there's been a number of companies that come to me and they've been around for 6-8 years and there's almost nothing going on. Literally.
You're like,
And I'm like, wait, what, how is this? Yeah. And I break into the economics and we start to have this conversation
Yeah.
about it. And, so it's amazing, what people think, but there's just not really the track record to prove, you get a deck, but then when you start digging into the deck and looking at the history, I look at the history. I look at how far somebody has come in a period of time, and I look at market traction, and I'm looking at capital utilization. How efficient are they with the money that they've received? Because that's going to be a very strong indicator that when I give them money,
Yeah.
how efficient or not efficient they're going to be. And you'd be amazed at how many people don't have capital efficiency, but just think that I'm going to give them money because they're saving the world.
yeah.
And I'm like, no.
It's not that simple. No, and to that point then too, what is the average check size going to be with that fund?
250,000 to 2 million.
Okay, so how did you come up with that number? I'm just curious.
It's basically just looking at economics in terms
how
of
big the fund is.
how big the fund is, what type of impact that we can have. We're doing early stage and Series A.
Yep.
So it's just honestly what makes sense when Darius and I evaluated the marketplace.
Yeah, and then as we're kind of wrapping up here with more ventures too, what makes more ventures stand out for these entrepreneurs that are looking at it to evaluate different funds potentially and obviously want money from you? What is it about more ventures that makes you stand out?
So I think there's a couple things that are really unique from
Yeah.
a venture side. So number one, we are a diverse team.
Yeah.
And so we invest in diversity. And we know that diversity outperforms those that don't.
Yeah.
And so there are very few VC firms that are founded by a woman and an African American man. It doesn't exist, right?
Sure.
And then number two is I'm very strong at marketing in media. And so we understand media, and a lot of these technology companies, they actually don't understand media. So I believe that we can provide a lot of value add as to accelerating market traction through understanding the power of media.
Yeah.
And then the third thing is like our vetting process. Mark has developed a proprietary platform where not only can we identify what we think is great leaders, but we can also help them through development. I don't know of any other VC firm that's actually committed to doing that.
Yeah.
And then I'm very smart about building a team and having very strong expertise across the 4 sectors that I'm investing in.
Yeah. And what are the best ways for someone to reach out or connect or even learn more about Moore Ventures?
Yeah. So, I mean, I'm Melinda Moore, Moore Ventures on LinkedIn. It's more-ventures.com is our URL. We have all these social channels.
Awesome.
So yeah, that's the best way to find me.
Awesome. Thank you so much for coming on the show today, Melinda.
Thank you, Justin.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.